So I'm head of firm-wide research at Galaxy, and Galaxy is a big asset management firm. So we have ETFs, private vehicles, venture funds. I've been in Bitcoin since 2012. I was head of blockchain research at Fidelity. I worked for Ron Paul's presidential campaign in 2008.
What's different about Fidelity and Abigail that made them, first of all, curious and then have a conviction quite early on about Bitcoin?
I think Fidelity is the third largest asset manager in the world. People don't realize this, but Fidelity is a privately held company. So it's privately held, family-owned, family-run company. And that gives them a lot more leeway when it comes to technology, innovation, and spend, and disruptive technology. There are a lot of people who view it as a hedge on uncertainty in general. Yeah. Every day, there are new people who believe in Bitcoin and truly understand that it, let's be real, on a fundamental level, it absolutely is a hedge. It's something that if you don't trust your government, you can take and hide under your digital mattress, right? If you have to leave your country, you can walk with it. You could memorize your seed phrase and walk with it, right? You can send it to anyone and they can't stop you. Like, those features are fundamentally extremely powerful, and they're inherently hedges against a fully intermediated centralized system. This is a broader societal issue. There is a malaise among the youth of the world about the state of the economy, right? Decades of crony capitalism and wealth inequality, a sense that you won't have a better life than your parents. 50% of the wealth is owned by like 1%.
Alex Thorn from Galaxy, welcome.
It's great to be here, Archie.
Thank you for coming in. We always treasure any moment we can have a guest to actually come into our studio because, like I said to Daniel the other day, we put a lot of effort into it and we're kind of proud of what we've got. But so welcome. I think people listening to this are going to be sick of me saying this at the start of every podcast, but it's a pleasure to have you here. People are familiar with you, but tell everybody else what you do.
Yeah, sure. So I'm head of firm-wide research at Galaxy, and Galaxy is a multi-service financial firm in crypto, big trading business, lending, OTC, derivatives, prime, spot, electronic, all types of trading. Big asset management firm, partners with Invesco in the US and State Street in the US, DWS in Europe, CI Global in Canada. So we have ETFs, private vehicles, venture funds, and an investment bank does M&A advisory for firms in Bitcoin and crypto, and then a big digital infrastructure business, which used to primarily be our large proprietary Bitcoin mining business. Now they have big staking business, and also they're transitioning the Bitcoin mining business into a high-performance compute data center business. We just announced a deal with CoreWeave to take over most of our existing site, or lease it to them, I should say. And yeah, I've been in Bitcoin since 2012. I was at Fidelity for 12 years before I joined Galaxy 4 years ago. So I was head of blockchain research at Fidelity. I co-ran Avon Ventures, which was the owners of Fidelity's crypto venture fund. And I just I got into Bitcoin. I worked for Ron Paul's presidential campaign in 2008. People know Ron Paul.
Yeah.
Dr. Ron.
So you came into Bitcoin through an ideological lens, or I'm presuming
it's actually kind of interesting because in my sort of first career at Fidelity, I was a forensic investigator at Fidelity Legal. So imagine Fidelity Investments, big giant firm, hundreds of subsidiaries and legal entities, lots of legal, regulatory litigation, employment litigation, not like a particularly large amount, but like any big company, and most of that related to securities law, right? So because it's a large brokerage and 401k and retirement investment company and mutual fund company. And I got interested in Bitcoin because as a forensic investigator, I was particularly interested in encryption and internet technologies, networking. I've been seeding on Tor for like 15 years at this point. And I was in an IRC chat talking with some people about the Euromaidan protests. Basically, this when Anonymous, the big hacker collective, was still around before Sabu got.
This is the protests in Kiev, Ukraine.
Correct. Where the
2014.
I think it was like 13, 14, and there were people in that chat saying, "Oh, you can donate Bitcoin to these people," and I was like, "What is Bitcoin?" And they were like, well, here's a picture of some activists holding up a QR code that you could use to donate Bitcoin. And I was like, oh, that's interesting. Like, it's internet money. Like, I like internet stuff. Got interested in it. And then, but it wasn't until several years later, or a year or two later, when Abby Johnson, the owner of Fidelity, got interested in it and assigned some people to look into it, literally like, look into this Bitcoin thing, right? We have a big financial company. We think that we're innovative with technology. We should know what this is. And they started asking around the company who knows about Bitcoin. And a lot of people were like, you got to talk to Alex in legal because he's been talking our ear off about this. And that's when I like really went down the rabbit hole. I was like, oh man, I should really learn a lot about this. Before, I just thought it was interesting. I now know that it was Alex Gladstein that was helping the Ukrainian activists accept Bitcoin at the time, who's a good friend of mine now. So it's all kind of come full circle. But Galaxy, we only deal with institutional investors, so we have no like normal retail clients, right? Trade with hedge funds, pensions, endowments, family offices. And I mean, we trade a lot of Bitcoin. I think we're probably the biggest in the world in derivatives. So, buying and selling options. We have a huge options derivatives desk. And, we have offices in London, Hong Kong, New York, Chicago, Bahamas, Tel Aviv, all over the place. So, we're just excited to, it's just it's so many eras in this market, It feels like we're in a new one now.
Just park that thought, because I want to ask you about Fidelity and Abigail Johnson's, I guess, interest, curiosity, and then conviction with Bitcoin, which has been very strong ever since. But because, Fidelity is a fairly large financial institution, shall I say, and most of them have been averse to Bitcoin up until the last 18 months.
That's right.
So tell us a little bit about like how, or what is it different? What's different about Fidelity and Abigail that made them, first of all, curious and then have a conviction quite early on about Bitcoin? So.
Yeah, I think Fidelity is the third largest asset manager in the world. They're the largest retirement plan administrator in the United States, something like, 40 million accounts or something like that. People don't realize this, but Fidelity is a privately held company. It is not a publicly traded company. It is owned by a majority of the Johnson family. Abigail is the third CEO and chairman of the company, with her grandfather being the first, and then her father, Ned Johnson, having run the company and really grown it huge from like the 60s and 70s until the 2000s. So it's privately held, family-owned, family-run company. And that gives them a lot more leeway when it comes to technology, innovation, and spend, and disruptive technology. And when I led blockchain research, I worked in a group called Fidelity Center for Applied Technology, which is literally like a technology incubator think tank. Programmers, researchers, coders, and like UX designers, right? Just building stuff. And with a really fascinating, no direct requirement that the things you are working on will be instantly monetizable. So a lot of leeway for innovation. And that I don't know exactly. I don't know if it was Ned II, the founder of Fidelity, or his son Ned Johnson III, who really grew the company massive. But I know that Ned III, Abigail's dad, was huge into innovation, and they had like 1-800-Fidelity, like before anybody had that on the phone. They invented things like check writing off of a mutual fund account, so you could have your mutual funds, but then you could spend from it. Nobody had done that. They thought that if you did that, people would take all their money out, right? They had Fidelity.com earlier than almost anybody, right? And so they have a long history of technology innovation. I think that's part of the backdrop. That plus the fact that it is family held. It's not publicly traded, so they can make bets, right? They don't have to. They're not living quarter by quarter.
They don't have executive career risk.
Not as much. So then, I don't know exactly what got Abigail interested in Bitcoin first. There is a story that she bought it at a kiosk in South Station, which is the big train station in Boston, directly adjacent to the Fidelity headquarters. I don't know if that's true. I do know that she was interested early, that when they spun up a thing called the Bits and Blocks Club, which is like an employee resource group about Bitcoin, that hosted over the years, like Saifedean Amos and Vitalik Buterin, and all these people would come to Fidelity and talk, and employees could join those things remotely. They could go to see them in person. You know, Zuko Wilcox, Jeff Garzik, all these people from like 2015, like, right? So people coming to lecture and teach about Bitcoin. And then that group later was run by my friend Amanda Fabiano, who later came to Galaxy to run mining. And so there was a lot of interest in employees learning about it and building stuff in it. When I was director of blockchain research and before I took that job, Fidelity had investigated like 50 or 60 use cases for blockchain technology. Many of them related to like our business, right? Oh, for example, if you trade with Fidelity and, you know, you're not breaking the law, but we don't like your trading. It's like manipulative or something to us, or you're figuring out a way to scam Fidelity or whatever, we'll kick you off the platform, right? And a lot of times those people will then go to other brokerage firms. And sometimes our surveillance teams will try to alert, like we'll say, hey, we see these accounts are transferring out of Fidelity to a different brokerage, like, hello, other brokerage, just be aware, like, that they were kicked off for manipulative trading or something like that, right? And so we were like, maybe there's a way to use like a blockchain ledger to like track, it's kind of like a digital identity type of project, to track these people, and maybe we can share. Anyway, we looked at tons of those types of things, right? And really none of them made any sense for a few reasons. In many cases, the switching costs were simply too high, right? Okay, maybe it's a good idea, but it's going to be too costly and give us not significant enough a benefit or cost savings to justify the switch, right? Many other times we were like, the problem's not actually a blockchain problem at all, right? Like we could just do that same thing I just talked about with a private, you know, password protected secured SQL database, right? If you know all the parties in the system, you don't really need the immutable ledger, right?
I think that's the key thing when assessing any other so-called project is, can this just be done on a centralized server database? And the answer almost always, so far, has been yes.
Yeah, I think that's right. I think one of the first papers that I wrote when I was director of blockchain research at Fidelity was, do you need a blockchain? And the answer was no most of the time. There were also entrenched intermediaries and rent seekers, right? Where it's like, okay, maybe it's a good idea and maybe it would be beneficial, but there's a lot of resistance, right? For some reason or other. So we mapped all these out and we said, what is the barrier? Like, what's the trigger for us to come back and look to see if the barrier has lifted, right? Like, for example, like theoretically, if it was like, oh, the blockchain would be great, but it's too slow. All right, well, make a note to track future blockchains and see if any of them are fast enough for that use case or whatever. And after all that effort, the main thing that we decided and determined was a viable and ripe use case and business was Bitcoin custody for institutions. We were like, well, we know people want Bitcoin, and we know at the time, it's like 2017, 18, there were no institutional custodians. And I still think that it's a good instructive story about using blockchains, right? And also the primacy of Bitcoin, the asset, right? Even today, if you look at what has product market fit in the crypto economy, we know Bitcoin does. People love to own Bitcoin. They own it all over the world. Nation states own it now. Institutions, corporates, individuals. Stablecoins it's like the only thing that tokenization's really delivered so far is tokenizing the dollar. People use those, right? And then I personally think swaps and lending and DeFi as concepts and like sort of the top apps are good. But the problem is most of the assets are terrible, right? I mean, it's great if you can swap permissionlessly between asset A and asset B, but if asset A and asset B are crappy, low quality, like, you know, L1 gas tokens or useless utility tokens, like, then the impact is limited, right? And I think this is where a lot of people are still wondering, like, well, is it still just Bitcoin the asset and, okay, dollars too, which is fine. Is there going to be something more? I think now with the new administration in the United States and the new Securities and Exchange Commission in the United States, people are trying to tokenize things like stocks, right? And there are plenty of barriers, and like it's very complicated to even be possible.
Well, when we say people, the main person pushing that is Larry Fink of BlackRock.
Yeah, that's true.
It's not an edge case. It's
no,
pretty much the whale
we
in
think
global
it's going to
financial
happen.
system.
Yeah, we think it's going to happen.
Is absolutely pushing in this direction. We'll get into that. We'll definitely get into that. But it's fascinating, the internal culture at one of the biggest fund managers in the world.
Right.
Is quite at odds with most other financial services companies.
Abby would go to a lot of those talks herself, right? In fact, the first time I ever met her at Fidelity after being a longtime employee was at one of these Bits and Blocks Club meetups, and I had put my stuff down at a table in this big conference room that was where the speaker was eventually going to start, and left my stuff there and gone out to get some coffee in the hallway, came back in, and she's sitting right there, and I was like, oh, it's so great to meet you, right? Alex Thorn, I'm a big fan. She's like, oh, Abigail Johnson. I was like, no, I know. I recognize you. Yeah, and I mean, she is an incredibly humble and brilliant person. She's very quiet, like in terms of public comms. Like, I think you'll only see Abby do an interview in something like Barron's, like every 3 years. Like, she almost never speaks. I think she won like a Business Leader of the Year or something award in Boston from like the Boston Business Journal or the Chamber of Commerce or something like that. And they described her as comically unpretentious. And I was like, that's really accurate. Like, she's super gracious and smart, and also like really a normal person. Just again, this is a company that I don't know what I think they like the assets under administration. So some aren't custodied, some are just, but it includes everything, all their mutual fund, their fiduciary assets, but also like plans. I think they have like $8 or $10 trillion under administration. So it's one of the biggest and most important financial companies in the world. It's one of the oldest. It's and like I said, the fact that Abigail is CEO and chairman, and I'm saying that because she's not chairperson. Like, she just calls herself CEO and chairman of Fidelity Investments. And it's a family-run company, and she's got, some of her kids work there. So it's quite interesting. It's very rare.
Because I'm sure you've heard many people say, professionals, executives, oh, I own Bitcoin, but I can't talk about it at work.
I mean, she has been talking about it for years. She gave a keynote address at Consensus 2017 quite early, right? I think which was like in May. It was even before the parabolic run at the end of 2017. And she had a pin that said Nakamoto for president.
Yeah, and it sort of highlights the importance of leadership, not just in organizations, but also within industries as well. And I think it touches on the significance of what Michael Saylor has done. It's not just accumulate Bitcoin for the sake of MicroStrategy, which is now called Strategy, but bridging the gap between Bitcoin, cypherpunk, retail, and the corporate world, and doing a whole bunch of work. First of all, just taking that corporate risk that, really only someone like Saylor could have done that, where he's got such a commanding position in his company. And then to do the work in the background, the advocacy, the research. It's I even commented at one point, like, I see him on podcasts that I wouldn't appear on. Some fella's got like 1,500 followers.
He's everywhere.
On YouTube, and he's giving interviews there, and that's really important.
Yeah, some criticized him at the at his party that he had like Altcoin daily there, right? I don't know if you saw the criticism.
Yeah. I think that was unfair, but go ahead. You
I also think, I think to your point, like, he is advocating everywhere. Like, why have that guy on? Well, because that guy just did a whole like thing about Bitcoin because he was there, right? I think Saylor is flooding the zone with as much content as he can to teach people about Bitcoin.
Well, one of my favorite journalists, Glenn Greenwald, used to get a similar kind of critique for going on Fox News.
Right.
And his riposte was, do you want me to just preach to the converted, or do you want me to reach people who would otherwise not hear my message? And I'm given the chance, because he would often appear on Tucker Carlson's show, the biggest show on cable news in the United States. Like, you'd be mad to turn down an opportunity to have your message heard on the most popular cable news network show in the United States. So, what purpose does it serve to ignore that opportunity? And I kind of see it in the same way. Like, I've run a poll multiple times in my account. Yeah, my account's Bitcoin Archive. It's Bitcoin. That's all it is, right?
Mm-hmm.
What do you own? Bitcoin and crypto, crypto, 70% own both, right? 25%, something like, was it 25%? No, I can't remember. Anyway, it was something like a 70% crossover. And that's pretty consistent through the market cycles, right? That's the audience. So are you saying that a channel that's got more than 1 million followers on YouTube should be ignored because they don't pass the purity test? Michael Saylor's not going on there to promote altcoins. He's going there to spread the message to people who may otherwise not hear it at all. And so by not going on those channels, are you advocating for some kind of echo bubble where we just sit around in a circle? Yeah, bro, 21 million forever, bro. You're like, I mean, okay, I get that. It's fun to do sometimes to be around people who are like-minded, but we've also got to reach outwards as well, don't we? I don't think anybody does a better job than Saylor.
I think he is the main character right now, and he's everywhere, right? And he is enunciating the Bitcoin maximalist position more loudly and coherently, I think, than anyone in recent memory. I agree. It's not advocacy if you're already preaching to the converted.
Yeah. I mean, it's probably a power of work that he's done in the background politically. He doesn't say too much politically in the public domain, but I'm sure he's done a power of work given how much he's done publicly on the retail side, institutional side for the investors as well. And I know some people have voiced concern about concentration of ownership, but mate, there's nothing you can do about that. So cry harder. Like, what are you going to do?
I agree. I mean, people were asking me this a lot when the ETFs launched, right? Oh, is BlackRock and Fidelity going to control all this Bitcoin? Isn't that bad? I don't think it's bad, but I also, to your point, I know it's unstoppable. It's inevitable, right? If
I'm not advocating for it. I don't want 4 companies to own all the Bitcoin, but there's nothing I can do about it.
Right.
We post all day and night.
Well, that's where the medicine would be worse than the disease, right? If there was something we could do about it, Bitcoin would have no value. Correct. So, and I think the other thing is, like, in proof of work, computation controls consensus, right? And in proof of stake, capital controls consensus. So it's much more troubling when proof of stake coins are centrally owned than it is when, owning one Bitcoin gives you no particular governance control over the network, right? So, and there are sort of, more afield and edge case ways that owning a lot of Bitcoin can give you.
Well, there's a social influence, right?
Right.
And so one of the biggest risks to Bitcoin is like a PSYOP to infiltrate the community, various communities, and to push certain, changes, points of view that might take hold and appear organic, but actually give rise to second and third order effects that were initially intended and now were unforeseen. And we've seen one instance of that already, and there's been an uproar. I'm not so certain. Like, I don't have a position on how deleterious the effect of, I don't even remember what the change was called. But what's allowing NFTs to be put onto
Ordinals?
Ordinals, that's it. So what enabled that? Can you perhaps just give us a little bit of a background?
Yeah. Well, basically, SegWit, the 2017 upgrade, which was necessary and solved transaction malleability. It also was an effective block size increase. If you do a SegWit transaction, it created a space in the witness field of the transaction where you can put a lot of data, right? Especially when you combine this with the Taproot upgrade. And basically, Casey Rodarmore was like, oh, well, we can put arbitrary data there.
So there were no conditions on what type of data you could put?
Not really. It doesn't seem to me that that's what was intended to go there. But also, not only could you put a lot of data there, but you could get the witness discount. So it would be cheaper to put the data there. Previously, right, there had been arbitrary data put on Bitcoin, like the Omni layer, which is what Tether used to run on Bitcoin, which utilized the op-return field, but has a very limited amount of space, like 70 bytes or something like that you can put there. The witness field is unrestricted and also discounted. So because the idea was that we encourage people to do SegWit transactions, and so we'll give them a fee discount if they do it. It's one of the ideas. It's introduced the idea of weight units instead of literally a byte size as the measurement of the weight of a transaction. And those weight units only cost a quarter of the amount of fees that like the other parts of the transaction do. So not only could you put the data there, but it was also cheaper too, right? Which made it economically viable to put large amounts of data there, right? Such as images, right? And yeah, I mean, this was an interesting thing that happened in Bitcoin because to me, it wasn't clear at all in the social layer of the community when Taproot was being debated that this would be possible. I think if you had told the Bitcoin community that if we do this upgrade, there's going to be a large and vibrant NFT like ecosystem that's built on top of it, I think Bitcoiners would have revolted against it at the time. I personally don't think it matters, and frankly, like the mempool's been basically clear, so it's not like it's clogging Bitcoin at the moment. And again, like this goes to just like voluntarism to me. Like I'm free to just use Bitcoin however I like, and if others want to use it, you know, and send valid transactions the way that they like, and it doesn't, you know, then one, that's for sure okay from a technical perspective. But two, I mean, if it's not disrupting Bitcoin, then like I don't see why anybody should really care.
So the controversy was basically splitting the community into two camps. Use it any way you like. Well, no, this is meant to be a financial transaction layer. And so what the hell are you doing with these silly JPEGs, right?
Right. It just doesn't seem like the correct place to do it.
Yeah.
Yeah.
But by the same token, you know, there are people, particularly Bitcoin maxis, who will be dismissive of the entire altcoin space. Mm-hmm. There are some of them who say, yeah, go and do your experimentation there. We don't give a shit, right? Mm-hmm. But there's others who say, that entire space is rubbish. All of that is going to eventually be built on top of Bitcoin, right? Mm-hmm. So how could that possibly happen if you only say Bitcoin is for financial transactions only?
Yeah.
How can that happen?
Well, that definitely was the view in an earlier era, that altcoins were test nets for future Bitcoin technology. And then that didn't really play out, right? I mean, you've got plenty of interesting, innovative blockchain technologies, in my opinion, outside of Bitcoin, plenty of them. And Bitcoiners, I think, I don't know, I'd peg it really like, you know, there's a debate about payments versus store value and block size in 15, 16, and 17. And then in 20, during the COVID period, I think the Bitcoin as digital gold and deflationary currency narrative, right? A monetary maximalism about what Bitcoin is really sort of solidified as
So why do you think that happened at that particular point?
Well, there was a lot of money printing and a lot of stimulus checks. And I think the emperor had no clothes in terms of the fiscal irresponsibility and monetary weakness of fiat currencies. So that probably played a big role. And it was before really any of DeFi existed in Ethereum and other places. So there still were no other things happening really. Like Compound itself, which is one of the big lending protocols on Ethereum, didn't launch its token until May 2021 or 2020. So, and then you had people like Paul Tudor Jones like saying, well, in this monetary regime, like gold should do well, but Bitcoin would be the fastest horse. And so you had institutional interest in it as a hedging instrument. And that really sort of exploded. I don't think people, so I would say there's now a sort of a third, which is that it's really about Bitcoin, the asset, right? It's not, you don't see a lot of people in sort of mainstream Bitcoin saying that altcoins are test nets and that we'll adopt that technology. There certainly are. I would say people who were ambivalent about ordinals saying, well, it's a valid transaction, use it however you like, it doesn't bother me. Sort of in the like technology maximalist side, right? Like it's Bitcoin, the network. It doesn't care who you are, where your transaction is. Like that's up to you. And then you still do have the altcoins or test nets. There's a big Bitcoin layer 2 movement. Again, like everything that is permissionless, you know, there's a range of legitimacy in that space. There are some really powerful ones that we like Alpin and Citria, like that have really powerful technology. Like I don't know if they haven't launched yet, but then there's ones that it's like, oh, we're a Bitcoin L2, but actually you just like send your Bitcoin to an ETH address, and you're like, oh, that doesn't seem like a Bitcoin L2 at all, right? There's a whole range. And I think the same is true just in the altcoin space. Like I think it is a powerful heuristic for Bitcoiners and for Bitcoin advocates to caution new entrants that a lot of the stuff out there in crypto world is a scam. It's an intentional scam, or it's a a bad project that's not going to deliver, it's overpromising or whatever, centrally controlled. Like, and there's tons of that, obviously, right? But my job is to understand the actual specifics. Like, I don't operate in heuristics, and I also don't believe that, there was also a view that merely talking about other blockchains or protocols or assets was giving them credence. And I'm a researcher. I don't believe that. I have to deal in nuance, and I'm a purveyor of nuance by definition, right? So, yeah, sure, there's a bunch of bad stuff out there. It doesn't mean everything is bad. It doesn't. I think objectively, empirically, there aren't any assets yet in blockchains that are comparable to Bitcoin. You can see it in the charts. You look at things like the Bitcoin cross ratios against other assets like ETH BTC. Like, the market is agreeing with that. Right. So, like, that's great. There's reasons for that. Bitcoin is a great asset. It doesn't mean that literally every idea is a scam. I mean, I think this is where, like, some hilarious trolls, like, you should never own chairs. What's that Lil Bubble track where he clips Michael Saylor? How many chairs are you sitting on? Have you heard that one?
I have, yes. Yeah.
I mean, that stuff is fun. I think these are useful heuristics. Like, when sort of normal friends of mine ask me, hey man, like, can you tell me about crypto? I really want to get into crypto. Like, what about like Cardano, right? And I'm like, listen, man, like, you should really own Bitcoin. Like, if you have no Bitcoin, you should really start there. It's like, if you want to get crazy, you learn the space and want to go out there on the risk curve and screw around, like, that's up to you. Like, I don't recommend it. I've gone full circle. Like, I started with Bitcoin. I got interested in a bunch of other stuff. And just over time, like I said, empirically, I just don't think there's a lot of other assets that are super interesting.
Well, the people who are particularly well informed, they have a basis for experimenting with their allocations, right? They can say, well, at least I know what I'm gambling on. Right. It is a gamble. It's the people who don't know much and who think something is the next Bitcoin. Yeah. And then you have a whole bunch of people pushing a narrative that, this is an investment proposition. It could be the next Bitcoin, etc. I think that's where and
private Telegram groups and Discords.
And that's not even addressing the structural nature of whatever this so-called project is. And often there are huge amounts of loopholes there that leave it open to scams and being defrauded as well. So that's the issue. I don't really care that people gamble their own money on whatever. I don't care if you go gamble your money on horse racing or the casino, but if you come and push it onto other people, right? I think that's unethical,
especially less educated or new people. Or, I mean, think about this. I think it's a much more broader symptom in the world. It's not just a phenomenon in crypto that there are charlatans pushing scams and making YouTubes or Discord channels where they, or overt scams where.
But there's no sheriff on the beat within crypto. That's why,
it's true.
And seemingly, there's no difference between infamy and fame as well. Like
some of them are bad. It's like that scene in The Big Short where he's like, "Why are they confessing?" And he's like, "They're not confessing, right? They're bragging."
Yeah, and there's quite a bit of Stockholm syndrome as well within the crypto altcoin space because they idolize the people who literally defraud them.
Well, I think there is a malaise. This is a broader societal issue. There is a malaise among the youth of the world about the state of the economy, right? Decades of crony capitalism and wealth inequality, a sense that you won't have a better life than your parents. I think this is widespread believed. I mean, income inequality, wealth disparity, right? I forget what Treasury Secretary Scott Bessent, I forget the exact stat, but it was something like, 50% of the wealth is owned by like 1%.
And that expectation is now a reality for all socioeconomic cohorts, regardless, if you were the child of a working class family, you probably stayed working class, maybe had a good chance if you got a bit of talent, you could move up. Mm-hmm. And, if you're lower middle class, same. And if you're upper middle class, you probably had a good chance of staying where you were as well. Right?
That's right.
But now we're seeing that actually everyone's getting rug pulled.
Yeah.
It's really difficult to stay where your parents
in that spot, and that is true. You're totally right. Whether it's inflation or like wealth centralization, which has never been bigger, in that spot, it's easier for a lot of people in their minds to gamble. rather than learn about the savings technology that is Bitcoin, right? And working hard and saving in something that's deflationary. And that's why you see sports gambling just everywhere. I mean, in the United States now, it's out of control. I mean, it's literally like you're watching the game and they're advertising the gambling during the match, right? And
so you've got wealthy people with more money than they know what to do with who are gambling, and then people who have hardly any hope at all.
That's what I mean. It's a lack of hope, I think, and that feeds whether it's I can find the next 1000x. Oh man, I wanted to do Bitcoin, but I was late to it, so I gotta try to find the next Bitcoin. But meme coins, meme stocks, right? Gambling, these things are pervasive, and yeah, they're not good, and I certainly do not want to justify or defend the purveyors of known scams. But I do think the interest in it and the susceptibility of people to those things is driven by a deep, darker societal problem. I mean, I have friends that were like, "Oh, meme coins are just fun, man. They're just fun." So I'm like, well, you have money. Like, they're not fun if you looked at the Pump.fun, which is the Solana meme coin launchpad, like it was something like 97% of people lost all the money that they bought in coins in that. Like,
not the platform though; they're killing it.
Exactly. So, I mean, is it? I believe in voluntarism, the golden rule, right? Like I want blockchains to be permissionless. I think that's core to the innovation, but. And I do think that people that obviously directly defraud others or lie. And, I mean, Hester Peirce said this really well, this SEC commissioner. She said, in part of this thing saying we're going to like relook at crypto regulation and roll back a lot of the bad stuff that Gary Gensler did. She still said, we do not tolerate scammers, liars, and frauds. Right. Like, so I agree with that. I'm hoping that the new administration in the United States will go after the scammers, liars, and frauds. I mean, they didn't catch Sam Bankman-Fried, but they sued Coinbase. Like, to me, it was like a misguided approach that, I mean, broadly speaking, I think Coinbase is a good actor. So like they have licenses. They're not trying to defraud people, right? It's an exchange. It was regulated. It's based in the United States. But then all these other people, like the guy, who was the guy? Hayden Adams, the guy that did the Malaise coin and was coming out talking about how they did it and how they sniped it. Like, that's literally front running, and it's known, right? Like, people like him should get got. Like, that's nobody wants that, right? I think it's a tough balance, because same thing with the permissionless nature of Bitcoin and other people using it different ways you don't like. Like, if you can't, if other people can't use it how they want, then you can't use it how you want, right? And you need these things. So I don't know. It's a fascinating clash between the hope that is Bitcoin and the malaise that exists, and that's really global. Like, the economics of most economies are stacked against the average person.
Well, what I found most interesting about the controversy around Ordinals was that it split people who are ideologically homogenous. Really, like you had libertarians saying Bitcoin, they're pushing Bitcoin purity, for example, financial transactions, store of value, all that sort of stuff. Mm-hmm. Get this shit out of here. Mm-hmm. And then libertarians who were saying, hey, it's permissionless.
Right.
So it's like, that was fascinating to me, because it wasn't really an ideological issue, as in politically ideological.
Right.
But I don't know how people decided what their positions were on that. How did you see that? Because I couldn't tell. You had Jack Dorsey, who's a strong Bitcoin advocate, but he was adamant, like, none of this stuff should be allowed.
Yeah, and he's an investor in Ocean,
that was filtering.
Right.
Yep.
I mean, I think, I think Bitcoin, the asset, is one of the greatest inventions in the world. I think the blockchain Bitcoin's blockchain is very good. I think there are other ways to design blockchains that are not inherently worse, right? I think there could be better ones, right? But
they could. You think so?
Oh, for sure. Yeah.
I mean, we had a guy like Adam Back. I'm not a technical person, but when someone like Adam Back with the deep history in Bitcoin, cryptography, and everything says, I tried so hard to improve on the Bitcoin blockchain, and I couldn't find a way without undermining its qualities.
Well, I think that's the core point. I mean, I think you have to be crazy to think that, like, the very first time that Satoshi launches Bitcoin, then that is going to be the literal best technology forever.
No, that's not what I meant, though.
No, I know.
Yeah.
So I think to your point and the point you're saying Adam made, like this is exactly my point. Is like the asset is so pristine, like the balance is so good. It's so resilient, right? It has created that you wouldn't want to mess with it. So with something like Ordinals, to me, it's like if people are using it in a way they want to and it doesn't jeopardize that, then I don't really care. If it does jeopardize that, I absolutely do care, right? And to me, that's the question.
I guess I want to bring it. I didn't ask it in a very good way, but what do you think was the decisive factor in people choosing one position over the other? Because it wasn't political ideology. It wasn't even Bitcoin ideology, but I can't really put my finger on how people decided.
There is a Puritanism aspect. It shouldn't be used this way, right? And I think there were some people that believe that. I mean, I don't use it that way, right? If this somehow makes it impossible for me to store my money in Bitcoin and spend Bitcoin, then I'd be very opposed to it. It just doesn't. If it did, then I'd be opposed to it, right? I think there were some people who that's a more pragmatic way of making the decision on how to think about it. There were some people who are more ideological and Puritan about it simply shouldn't. It's not what it's intended to be, right? But I think at the core, it was there was a lot of fear at the time that it would clog the blockchain, right? And folks like the Taproot Wizards were poking that bear by mining a single transaction 4 megabyte block, right?
But can I just say the blockchain will eventually get clogged?
Yeah, I think that's right. There were a lot of other pragmatic people who said that, like, this is, if nothing else, a good stress test, right? I mean, you're not going to scale Bitcoin to 4 billion users with low fees. It just doesn't work, right? And a lot of people separately are worried that it can't work, right? That people that talk about the security budget problem, right? Which I think is a quite interesting discussion. I mean, I have a pretty nuanced take on it, which is mostly that it's not a problem now, but it's going to be a problem sooner than 2140 when the last Bitcoin.
So you think that will become a problem?
Well, objectively, transaction fees will comprise the totality of miner revenue. So either Bitcoin goes to a bajillion dollars, and so that those fees are low in Bitcoin terms, but they're high in dollar terms, or fees go up a lot. Or you get less hash rate, right? And there's a lot of nuance.
Like, the first situation, first scenario, that's quite plausible.
Yeah, it is. It is. But again, it's not really how you should design a system, right? I mean, it's risky. I mean, the system itself can't guarantee what the dollar-denominated price of the asset's going to be.
No, but isn't that the whole point of having scarce block space? Is that those who deem their transaction to be the most valuable can afford to pay the most, and so they will bid up space within the blocks. It's true, and I think that should be able to fund some kind of security budget.
That's right. Yeah. Well, look, Bitcoiners will get the security they pay for, right? And so, like, unless something changes, the amount of hash rate we'll have will just be how much the network's willing to pay for. It's no surprise that one of the biggest critics of Ordinals, Luke Dash Jr., is also an advocate for reducing the block size. Not
reducing the block size. Okay.
So I don't disagree. I think that's right. I mean, the block space is scarce, but I'm saying, like, basically as we record this, like, the mempool is empty. So, like, it's scarce, but nobody's using it. So, like, it does need to get used for that fee market to kick in. Now there's a bunch of, like, interesting ideas here. Like, I mean, I don't, an important nuance is we don't really know how much security we even need. We don't know how much hash rate is enough. I mean, it's basically been parabolic for years. Like, that seems good. I think what we know is that the majority of potential SHA-256 hash rate in the world, we want mining Bitcoin. We don't want a pile of extant potential mining hash rate, right? This is why people were really concerned during the summer 2021 China ban of mining, was because all these miners came offline, and people like me in the research space, like, we were calling around being like, those are getting on a plane to, like, fly to somewhere else to mine, right? They're not, like, in a Chinese warehouse about to be turned on by the government, are they? Right? Because the difficulty adjust down. The network was fine. We had, like, the 2-week period when China banned Bitcoin mining in summer 21. Had the highest average block time since, like, 2009 or 2008. It was like 2010. It was like 24 minutes or something, which for in a 2014 block epoch, which is the mining adjustment period, that's like incredibly high for an average.
And if you could just explain to people at home watching or listening to this, and that's because the hash rate fell, but the difficulty adjustment didn't quite kick in.
Hadn't kicked in yet. Yeah. So I think is 2014 blocks, and so, which is about 2 weeks.
There are fewer miners doing more work, and
correct.
It takes longer time.
And once they get to that adjustment, Bitcoin can adjust down, and then it will retarget the difficulty for the mining to hit an average of 10 minutes every block, right?
Yeah. Were we able to track the migration of those miners and account for them appearing elsewhere?
Not really, sort of. Right? This is what I was saying, is like we were checking, like, talking to miners that had been in China, being like, you are moving them, right? You didn't get raided by the CCP or something, because the risk is that once the difficulty goes down, now you have this pile of hash rate that can then come back on and overwhelm the network right before the difficulty goes back up. Like there's a way to attack Bitcoin when there is a pile of hash rate that isn't mining the network. It's one of the reasons why GPU mineable coins like Ethereum were so vulnerable. Imagine a malware that infects every PlayStation 5 in the world. GPU sitting in millions of households, right? Just not even on all the time. And they all just start mining ETH, right? You would see an enormous hash rate takeover of the network. And so coins that are proof of work that are mineable by general processing units are risky because there is a lot of potential hash rate that's not mining the coins. One reason why ASICs, which are Bitcoin specific, SHA-256 miners, they add security to the network. They do make it harder to mine, right? But they also, because they're specialized hardware, make it harder to attack, right? And so, we didn't know. I mean, we tried to track. There are groups like the Cambridge Center for Alternative Finance that tracks mining hash rate stuff. But again, like, this is one of the beautiful things about Bitcoin. One of the many is that anyone can just show up and mine a block. Like you can just theoretically, you could compute the proof of work on paper and deliver it, have a miner broadcast it. And if it was the first acceptable proof, you would win the coins. You don't have to declare yourself to the network. And proof of stake, you have to sit there waiting and voting and validating. Like the network knows your computer, right? And proof of work, like, you just deliver the proof of work and get paid, right? So similarly, like those ASICs can be anywhere, and if they're hashing and following the rules, then they can earn. And so there's no like registry of like where the mining is, right?
Well, that's an interesting point, because I was told by someone that'll come out in an interview when I publish it quite adamantly that the Chinese government is mining Bitcoin.
Yeah,
and now since the China mining ban, was it 2022?
21.
Summer
21.
Since then, has there been any sort of detection in the rise of an unaccountable, unattributable hash power around the world?
Well,
that we could perhaps say, well, that could just be the Chinese hash rate moving.
I don't know. I don't think so. I think if you look at most miners use a mining pool, right, to mine. And the reason for that is, so let's say you and I are mining, and we could each just mine on our own, and when we hit, like, we'll each earn more than if we split with each other. But there's a lot of variance in when we'll hit. And if you're trying to run like a big business,
it's a probability game, and
correct.
You're more likely to be.
Well, you'd rather get together with a bunch of people and pool your hash rate, and if you hit and I don't, we share. And then when I hit and you don't, you get some of mine, and that smooths out the revenue, which makes it possible to run an actual business. Whereas if you could have a probability of, let's say, 1 in 100 of hitting a block, but hit none for 500 days, and then hit 3 all at once, or not, right? It's not every time you're rolling the dice, the odds don't increase when you don't hit them. It's not like you're owed one, right? Those pools declare themselves, right? They do. So like, actually, if you look on, mempool.space or a block explorer, you'll see that like Ant Pool, F2 Pool, like Foundry USA, right? Like these are the ones that are mining the blocks. Behind them are all these miners. And those, when I say miners, can mean so many different things. The mining pool, then there could be companies that mine, like Galaxy, right? Or Foundry themselves, or anyone, any of the public, Riot, Mara, whomever. Those are miners. They're mining companies. And then you have the machines inside those buildings, right? Which are also miners or mining machines, right? And ultimately the block template, what transactions go in the block that is mined, whether it's Mara's machine or Galaxy's machine that actually found the block, what transactions go in them and who the rewards are shared with when the block is found is all determined by the mining pool. And there is pretty bad centralization in the mining pool space, right? It's like a third, and then the final, or a quarter, and the final quarter is like all the other miners, right?
So let's take this moment to break down some of the risks to Bitcoin, because we alluded to the social element before. Yeah. When I interviewed Willie, he gave me so I asked him quite an open-ended question, and he defined it in his own way and gave me his risks. So if I were to ask you in a similar way, what is the risk of Bitcoin failing from here? How would you interpret that question? How would you answer that?
I love this question. There's many, but I would say let me refer to a fascinating post that Greg Maxwell made on Reddit some time ago. Somebody asked him this question: Is it a 51% attack? Which is kind of what I'm.
Well, there are a few vectors, right?
Yeah, but they asked him, is it a 51% attack? Is it like the theft or the government shutting it down? And at various times these have been big risks. Right, I was kind of describing what a 51% attack could look like if you had extant hash rate. He said no. The biggest risk is apathy. Is basically ignorance and apathy. That if we fail to explain in an oral tradition the values of Bitcoin, the fundamental memes that describe the properties of the network that are so important, unstoppable money, right? Or digital gold. And these important, there's many memes that explain these core features. And if we as Bitcoiners fail to imbue those principles about what really makes Bitcoin valuable to the future generations, there's a risk that they may not know them and they may not support efforts to preserve them. And in fact, they may end up supporting malicious hard forks that they don't realize, right? Adding convenience instead of at the expense of fundamental features that are actually what make Bitcoin valuable. And that risk increases with the further financialization of Bitcoin, right?
So how do we reinforce that? Because the way I see it, we need a strong technical community to inform people like me who have no technical background, and I have no inclination to become a technical Bitcoin holder either. I've got other priorities, right? Mm-hmm. Then we've got media aspect, and then we've got the cultural, societal, everybody else who contributes to all of that. How do you see that?
Yeah, this is one of the risks when we were talking about Saylor, or like we talked about the ETFs, right? And I said computation controls consensus, doesn't give you any particular vote. But you do have, there is a risk. You have fork choice selection, right? I mean, let's say that there was a potential fork, right? Like in the block size wars. And if the ETF said, we're not going to recognize that one, we're going to only recognize this one. Well, there's an enormous amount of money at stake, right?
Especially when the HODL base changes to a bunch of boomers.
I mean. Let's say they're all in the ETFs.
Compared to Cyber Hornet plebs.
Right.
Who are they going to listen to?
That's right. And I think if a lot of Bitcoiners are actually owners of shares of ETFs and the ETFs say, oh, we're going to support this fork. And like literally if our fork, they all have language in there. All the ETFs have language in their S1s or whatever I think it's an S1 about forks that, most of them, I think rightly, but some conspiracy theorists see this as a risk that most of them say that in the event of a fork, they will have sole discretion as to what version of the fork they determine is Bitcoin.
So there is a mechanism to fight back against that. There's the in-kind redemptions, right?
Yes. Well, not yet. In Europe, yes. And some yes.
That hasn't come into play in the United States yet?
No, not yet. And we think it will. So this is when you create shares of ETFs. Right now they're all cash create. The thing is about the in-kind, the idea is that you could deliver Bitcoin to the ETF rather than cash, right? So right now they call it the authorized participants, which are entities that actually think of them almost like market makers for the ETFs. They deliver cash to the ETF, the asset manager, who then buys Bitcoin. Right. And similarly, like if there's enough outflows and demand from the ETFs, they sell Bitcoin and give cash to the APs, right?
The authorized participant is effectively, would it be accurate to call them the middleman between
Yes.
the ETF fund and the buyer and the investor, essentially, and they're the ones issuing and canceling shares in.
That's right.
Okay.
But the thing is, so with in-kind create and redeem, the idea is, well, they could deliver Bitcoin directly to the ETF rather than giving cash to the ETF so they could buy. And then similarly, like you could take Bitcoin out. My understanding, though, is that this is not likely to be available to actual retail.
The end
No.
investor. Okay.
That this will add efficiencies to the system, but it will be the APs themselves doing it. It won't be like, oh, I have these shares of, BTCO and I want to withdraw them into Bitcoin. I don't think I'm going to be able to do that.
So
I would love if I could, because to me, that's also a taxable tax advantage, right? Where I'm not actually selling it.
So that will be a point of friction then for people.
I think it could be.
Okay. So
this is the thing. It's not just in the case of a fork that you want to it's kind of like a proof of keys day, right?
Mm-hmm.
Like not your keys, not your coins.
Sure.
It'd be really cool if you could hold the asset managers accountable by periodically removing your Bitcoin from the ETF. But to me, it's also just quite simple. Like if you believe, is what I counsel people when they want to buy Bitcoin. Obviously, depending on the person, a big option I now suggest is the ETFs. It's so easy. But if you're like long-term bullish Bitcoin, that it's going to become as a system and as an asset, a huge important thing in the world. Well, say we get to that mountaintop and we win, you're just stuck in shares of it. You can't actually use the network with those ETF shares, right? Like you'd prefer to have actual Bitcoin if your thesis long-term plays out, right? Because with the ETFs, you're basically only getting financial exposure to the asset.
Yeah.
But what if it really is important and widely used as a network itself? Well, you got no access to that.
As a network, the sovereignty.
It's the same thing I wonder about gold bugs who only own gold ETFs. Like a lot of them are effectively doomers, right?
But they're also effectively undermining their own investment proposition.
That's what I'm saying is like, if we end up in a Mad Max type world where the economic system fails and you got to start transacting in gold coins, well, like you have ETF shares, you don't have gold coins. You think you're going to be able to get your gold out of that in the doom situation that you were buying gold for in the first place?
Yeah.
Now, many people they just want financial exposure to gold.
And it's possible that ETF Bitcoin and spot Bitcoin could trade. There could be a price disparity in such a moment where if sovereignty is trade or could trade at a premium in such a moment, and the ETF is recognized as mere exposure to the asset.
It will track better if there is in-kind create and redeem. It'll be easier for the APs to arb that. That should arb. But whether or not they actually trade differently, like it is fundamentally, look, they have different pros and cons, but the main cons of the ETFs are that you don't have actual Bitcoin, right? And you might want actual Bitcoin. Right, if you're if
in your custody,
if you're fleeing country,
mm-hmm.
right, because of war, strife, pestilence, political inflation, whatever, like you're not going to be able to flee with your ETF shares. You're going to want actual Bitcoin. So, to me, like there is that risk of back to the original question about risks, like the risk of apathy goes up when it doesn't require you to learn how to use Bitcoin and experience the fundamental properties of it because you're using it, but instead you're only buying the ETF. And so, and this is what a lot of people are asking me, like, isn't this a big risk with the ETFs as an example? And I said, it is kind of a risk, but also I think the answer is not to ostracize the, Invesco, BlackRock, Fidelities. It's to bring them in,
because
to educate them.
They're doing what they are expected to be doing as investment fund managers, corporate financial institutions, right? They're not plebs.
Right. Right.
I mean, I remember watching a podcast once, and one of the guys interviewing Saylor asked him how they were custodying it, were they self-custodying it? And, he gave the answer you would expect, which is obviously no, but he didn't go into details about exactly what they were doing. But you can imagine what a listed company would need to do in terms of having checks and balances.
Right.
And one of the guys lamented that he wasn't self-custodying. Like, did you really expect like $5 billion worth of Bitcoin in his back pocket or something?
Right. Right.
On,
I mean, look, it's different, there's different needs. Yeah. And look, that's one thing that's great about Bitcoin. There's a lot of ways to store it, to access it, to trade it, to buy it.
Yeah. Sorry, I interrupted your point about bringing institutions into the fold. And I have a good example I want to share of that, but I want you to finish your
well,
point
yeah,
you were
it's
making.
more just that, like, if you look at and I think it's working. So far, it's working. It may not always work, but I think it's a
Give us an
never-ending.
example of it working.
Yeah, well, I mean, look at BlackRock, how they're talking about Bitcoin. I mean, it's quite progressive, and I mean in a pro-Bitcoin way, right? I mean, describing it as a potential, as a gold. I mean, they have been very, very firm on the idea, saying that it is a hedge, that it is about hedging against fiat uncertainty. They literally say stuff
talking about
like that.
monetary debasement.
That's
and
right.
The dislodgement of the United States dollar. I mean, that's quite radical for the biggest fund manager in the world.
It is.
To be openly saying that. They're not advocating for it to happen. They're just highlighting the risk.
And it's not a hedge fund. It's not Paul Tudor Jones, an incredibly successful and influential investor.
So make the distinction for us. Why is that important? Why is that distinction important?
Yeah, well, between them, one, I mean, BlackRock is an asset management firm. They're the platform for investing, right? One hedge fund, big or not, successful or not, is still a proprietary type of trading shop. Like, they can have whatever view they want.
They're opportunistic about some kind of position in the market.
They may have limited partners who give them cash to invest, but like those people don't have to invest with them. If they don't like the theory, they can walk away. BlackRock's by far the biggest ETF issuer in the world, so like you can't like walk away. Right? Like, they invest in every company, and almost every retirement plan owns funds that are managed by BlackRock. So it's much more similar to Abby Johnson being for it than it would be to, right? These are the backbones of the investment landscape. They're not mere participants in it. And look, if you look at how BlackRock's talked about it, all the research and good content and clear understanding of Bitcoin that Fidelity demonstrates, like this is what we try to do in our partnerships with Invesco and State Street, is, again, explain what makes Bitcoin truly valuable. It's not that it can be held in your brokerage account. That makes Bitcoin accessible. It doesn't make, the reason it's valuable is that it's unstoppable. You know, the monetary policy is transparent and predictable, right? It's, accessible, permissionless, mineable by anyone, right? Like those are the features that have to be maintained, right? And without them, it's not valuable. Like we said, if we could stop people from doing ordinals, they could probably stop me from transacting, right? If we could stop a foreign dictator from storing their wealth in Bitcoin, then they could stop me, an average person, from storing it. So like you've got to take the good and the bad when it comes to things like uncensorable transactions and permissionlessness. And so like promoting those values and understanding to these new institutional players and thus their shareholders is, I think, paramount important, because I think the most clear risk is that there is a fork in the road, a decision about which way to take Bitcoin, and they all pick the cucked version, you know? They all pick the version that is bad, as censorship or whatever.
And a large enough investor cohort takes their lead because they're a big brand, and that's how, I mean, boomers are famous for following the authority of brands.
But also, to your point, it's not even just their influence, it's the fact that they have your money. If they say, hey, you know, I know you wrote in and said that you want to do the mega-based permissionless fork, you don't want us to do the compliance fork or whatever, but we are going to do the compliance fork, so like your money could become worthless if the compliance fork loses, right? That is the risk. The fork choice is the risk. They have enough Bitcoin. Same thing with companies like MicroStrategy. Like if they support a malicious fork as determined by the community, like it's going to be the idea. Like this is what Jihan Wu did with Bitcoin Cash, and like these guys, and Roger Ver, they dumped their Bitcoin for Bitcoin Cash in an attempt to make Bitcoin Cash the Bitcoin, right? And there is no like, which one's the Bitcoin? Let's look at the code. Like, which fork of Bitcoin is recognized as Bitcoin is a social layer question. And they will have a lot of people's Bitcoin and money, and they will also thus have a lot of immediate people in their side of the ring if it comes down to that. So to me, this is why getting Bitcoiners in those companies, teaching those companies about what makes Bitcoin valuable, so that they, instead of being a risk and opposing the foundations and fundamental principles that make Bitcoin valuable, instead espouse them.
There was an instance many months ago now where BlackRock, under a little bit of pressure from the social layer, amended the agreement with Coinbase our good friend Tyler Durden on Twitter, he made a point in his inimitable style that actually there was quite a large window for Coinbase to actually fulfill the bitcoins that the ETF purchased. I haven't verified exactly what it was. It's just off the top of my head. I think it was something like, I don't know, up to a month or something.
Mm-hmm.
And BlackRock, within 48 hours, amended that agreement with Coinbase to narrow that window to it might be 48 hours now.
Yeah, to deliver the Bitcoin, basically.
Do you recall that instance, what I'm talking about? Yeah.
Yeah,
So I thought that was a really successful instance of the social layer that you mentioned.
I mean, I think
actually exerting some pressure and getting a change in institutional behavior into a formal agreement.
Yeah, and there are other things like proof of reserves that companies like Bitwise have tried to pioneer and nudge the industry towards, in terms of the ETF group, let alone companies like River, that I think is probably the world's most high quality proof of reserves.
I think they've stepped that up with transparency about their balance sheet and financial viability, which I think has to be applauded because in some sense they're kind of giving up a little bit of strategic knowledge as well.
Absolutely, they
internal
are.
Corporate knowledge. But for the sake of transparency and assurance, they're saying, hey, look, we're well-funded. We're not at risk of going broke. Here, we can prove that. And I think that ought to be applauded. I just wonder, is anybody going to follow the proof of reserves example of Bitwise? Has BlackRock followed that? I
don't think any of the other asset managers.
What do you think stands in the way of doing that?
There are some technical hurdles when you use custodians in general. Like they actually have to, especially if you're talking about cryptographic proof of reserves, like periodic key signing, right? So it's actually one of the core features that makes Bitcoin better than other assets. You can't cryptographically prove that you own a stock. It's not possible, right? You can with Bitcoin. It's actually a world where, especially if you get other tokenized assets, like actually cryptographic proof of reserves could be one of the key features of blockchains in general that they enable. But for example, you got to come in and sign. You got to sign something to prove that you own the coins. And like a lot of custodians have spent the last, 10 plus years building protocols that make it extremely burdensome to sign, right? So that they don't get hacked. So there's stuff like that. It's not obviously insurmountable. It's just, if you're using a third party custodian, it's kind of on them to be able to enable this for you. You may not want to be that transparent, right? You might want it, but you don't want to give away addresses or anything like that. I think the point about River, what they're doing, you're totally right, giving information about the corporate viability of the company. They're not primarily a custodian, but obviously they are a Bitcoin brokerage that has Bitcoin on behalf of clients. If you prove you have the Bitcoin, that's great. You've got the Bitcoin. But it's the liability side, the corporate liability side. So the cryptographic proof is showing that they not only have X number of Bitcoin, but they are proving to the user that the Bitcoin the user holds on the platform is part of that Bitcoin, right? But that's not to say there isn't like $1 billion lien on their other assets that could eventually help cause an encumbrance to occur on the Bitcoin. So even if you have the Bitcoin, if you as a company are going to go bankrupt, how will that Bitcoin be treated? We don't know. So it is giving information about your own corporate viability and corporate liabilities is helpful there, I think.
So the interesting point you make, because a lot of people don't really understand that when they have their Bitcoin on an exchange or at a custodian, how that Bitcoin is treated in the instance of a liquidation depends on what the customer agreement was when you signed. Right. So
for the most part, yes.
Yeah. And so you may have to line up behind creditors, for example, and after they're made whole, then you get the crumbs.
It's very possible.
If there's anything left.
This was something that Gary Gensler's SEC did that was really stupid. I know you probably know about SAB 121, Staff Accounting Bulletin 121 from the SEC's Staff Accounting Division. This is actually guidance. They claimed it was non-binding guidance. The Congress disagreed and said it amounted to a regulation. That's how they voted to overturn it. Biden had to veto the overturn. It's one of the most hilarious things that happened at the end of Biden's presidency as it relates to crypto was that President Biden was forced to burn political capital defending an arcane tax accounting rule that Gary Gensler's SEC created that screwed up how banks can custody Bitcoin.
Well, they couldn't effectively.
Well,
they were
that's
effectively
right.
Banned from.
But it wasn't just So it said that public companies, if they custody crypto assets on behalf of a client, those assets have to live on the asset side of the company's own balance sheet. Companies, not even just banks, companies. And so it was really like an anti-Coinbase rule. It was pretty much the only public company that custodied Bitcoin. Not the problem was, so for a company like Coinbase, shortly after that came out, they disclosed in one of their subsequent filings that actually means, because it's on our balance sheet, it actually means it wouldn't be bankruptcy remote in the case of a bankruptcy, because it would fall, just like you said, in like the company's own balance sheet. So it would be subject to whatever stack of creditors there is, right? So you might not, whereas with a bank, if you have your money literally in a safety deposit box and the bank goes bankrupt, they don't like take your stuff out of this. Like, that's your stuff.
That's yours. Yeah.
Yeah. So, and then the problem with SAB 121 was, well, it turns out most banks are also public companies and they have separate capital requirements from being a bank, from other regulators, that say, okay, well, if you do have assets on your balance sheet, they have to be matched 1-to-1 with cash. So that made it financially impossible for banks to offer custody.
So just to clarify that, if a bank held your Bitcoin, they needed to hold $1 of cash.
Yes.
For every $1 of value in Bitcoin that you deposited with them.
Correct.
And they don't need to do that with your fiat savings, for example. Your fiat savings, in fact, can be rehypothecated.
Well, this is the custody bank.
Sure.
Not just that, they don't have to do it with your securities that you put there, right? I mean, someone like State Street's one of the largest custodians in the world. If State Street were to go out of business, you don't, like, State Street's creditors don't get your stocks. Like,
so let's make that point. Look, so a bank or a financial institution providing a custody service is not a novel thing that's just coming into play with Bitcoin only.
No.
They custody all sorts of financial assets, and Bitcoin was being treated, I guess, in a punitive way, in requiring the bank to hold additional capital just because they were holding your capital.
Correct. And this is why this is another one of the things that Gary Gensler's SEC did that was so detrimental, because it meant that, well, now no banks were offering custody services. I think BNY Mellon which is the oldest bank in the United States, founded by
Is it the oldest bank or the
Yes.
oldest custody bank?
I think it's the oldest bank. It's the Bank of New York. It's founded by Alexander Hamilton. And they had built Bitcoin custody, but they were encumbered by this rule, because so they would report quarter after quarter that they had merely de minimis assets custody, meaning a very small amount, not like an irrelevantly small amount, because they, if you have $1 billion of Bitcoin, okay, you got $1 billion of cash also sitting there. I mean, that's a lot to start with. But what if Bitcoin goes up 10x? It's done that. Where are you going to get the other cash? You're just going to produce cash. So it makes it non-viable for the world's best and oldest custodians to custody Bitcoin for clients.
And they were keen to custody Bitcoin up from the.
That's
off
right.
the top
for
of my head,
time.
the news that I've reported on BNY Mellon. I think they're just called BNY.
I think they are.
They direct message me every time I write BNY Mellon.
Yes, BNY.
And I just told them, I know, I'm just doing it to annoy you. They have been very, very keen to get into the Bitcoin space with custody.
That's right.
So it will be interesting to see what their moves are now. Is it SAB 121?
Yeah, SAB 121. Now SAB 121 is overturned by SAB 122.
122, okay.
Which, but again, this was one of those things that was done that actually has the opposite. It makes the system less safe, rather than let institutions custody at the world's greatest, most storied custodians in the world. Now they all got to use, like, no offense to any of these companies, but like, much less seasoned companies, right? Because, which just doesn't make any sense. So, I think all of this is, it's all improving. I think it's improving. But again, the story, as Bitcoin grows, like, you're going to have players like this. It's not just the self-custody guys. It's not you're not having the discussions anymore on bitcointalk.org, and you're having them in boardrooms, right? And so I've been very heartened personally by the quality of the Bitcoin discussion in these new cohorts.
So tell us a little bit about that, because a lot of us on the timeline, we're not really privileged to hear those discussions, and of course, it's difficult for people who are to share them in the public domain. Of course, I'm not asking you to divulge specific details about any discussions, but can you share with us any insights about the general themes that you've come across? And because,
well, I think especially with the world being quite clearly a more multipolar world than it has been in a long time.
Geopolitically.
And it looks like that's only accelerating. I mean, tariffs sort of by definition will accelerate it because they increase the cost of buying our dollars. That's the entire thing, right? If you're the global reserve currency, you net export your currency. That's how it becomes the global reserve. You have to send it everywhere. Right? And this is called the Triffin dilemma. This results in us buying goods with our dollars, and it has great benefits, by the way, to the issuer of the dollars. In our case, of the dollars. So when you think about saying it's unfair that we have a trade imbalance with another country, not only is it not unfair, it's specifically what we signed up for. But in any case, if you tariff those who export to you, you raise the cost for them of buying your currency with their goods. Well, so they might say, well, maybe we don't want to buy this currency with our goods. Maybe we should buy a different currency that's lower cost to buy, right? And it will accelerate, most likely, the forming into blocks, right? It's not the Pax Americana of 1989 to 2001, which is like the Matrix, the movie. They were like, oh, we designed it like 1999, which was the apex of your civilization, right? There's some truth to that. And so to your point, this is accelerating discussions about, terms like the Triffin dilemma, global reserve currency. If you search global reserve, you'll see more hits on Google than in recent years than ever, right? These discussions are in the forefront. They're not just on the forefront in, libertarian minded X spaces, right? These are happening in corporates, at asset managers, at institutional investors, pensions. It's happening in the White House. It's happening on cable news, right? So the knowledge of especially also with inflation that we've had for the first time in 40 years or so, right? Over the last few years, that has the question of what is money has been being asked at higher and higher levels than it has been for decades, right? All of that leads to a more sophisticated conversation, and you can't even one of my favorite producers of crypto asset research is the St. Louis Federal Reserve. They produce a bunch of interesting academic research for years. They've been interested in Bitcoin, right?
Don't they release the egg index?
They do. They have a whole bunch. That's the main data, one of the main data parts of the Fed. But my point is you can't. It's not surprising. These are people that work on money. What is money? And you can't ask those questions and not start looking at Bitcoin and finding it at a minimum fascinating. So, again, you talked about BlackRock saying that it's a hedge against debasement. That's something that, Ron Paul supporters used to say.
Well, 18 months ago, the idea that BlackRock, let alone any financial institution, would be openly championing that just
right.
Unheard of. You wouldn't think so.
Well, it's you can just do things, Archie, right? I'm sitting in a room in DC and I'm having a U.S. senator explain to me that Bitcoin is great because anyone can use it and it's permissionless. And I'm like, am I tripping, dude?
Where am I?
Isn't that what we used to say to you?
Yeah.
And now it's yours. So I think the knowledge, it's purveying up, and there's more interest, I think, among elected officials. There's all these countries where they're it might just, I think, was it Germany? There was a guy who was a parliamentarian there, a member of parliament, who was advocating that they put Bitcoin on the balance sheet. Now, it's just one or two people in their parliament so far, but it was just one or two people in our Congress a couple years ago.
This is one of the things.
It is advancing as a concept.
One of the reasons why I think it's really important that people still stay on Twitter. I know there are a bunch of people who are on Nostr, and that's fantastic. Go there, enjoy it. It's a different vibe, right? But don't leave Twitter. And I know all the reasons why people are leaving it, but that weakens the culture. It weakens the community. And we need to still propagate the memes, the messages, the ideology, the values of Bitcoin that make it strong, make it what it is. And even though if it gets a little bit toxic, gets a little bit shitcoinery, we actually need, those 200,000 Bitcoiners who are on Nostr. We need you on Twitter.
Yeah.
It makes the community stronger. And, when you want to go back onto Nostra and enjoy the vibe of that community, by all means, you can continue to do both. And I know most people do. But I don't want to see the community split up because it just weakens it. What you might get is a stronger signal there, but if you're only there, what you're doing is you're subtracting from the community and you're only enjoying it. It's just a cacophony of, it's people repeating to each other the same things over and over. It's okay for technical discussions to live there because a technical community needs, a small, vibrant community where they can have their discussions unfettered. But for the broader discussion, I do encourage people, and I know how much you love being amongst your own. I do encourage you to still come back onto Twitter because it only strengthens the culture, and we need the culture. Without culture, Bitcoin is nothing.
I agree with that
very, very quickly.
It is a there are different ways to think about what money is, and some say it's a social construct. I think there's more to it than that, but it is certainly a huge social aspect, right?
Yeah, you need certain properties around whatever the material is, whether it's gold or Bitcoin.
Right. It wasn't like everybody. Yeah, it wasn't like everybody grew up and woke up one day and said, "You know what? Let's pick gold."
Gold. Yeah.
I do think money is an emergent phenomenon, but it's also a hugely social phenomenon. And again, like with social media, I love Nostr, but I also just want to be on whatever the biggest one is, right?
Yeah, I want to be clear. I'm not disparaging Nostr.
But social media is by definition a network effect application, right? So breaking into subcultures like reduces the reach and growth of culture. I think there's a place for it. I mean, whether it was like the Bitcoin subreddit or like a forum, like people love the internet makes possible the growth of many niche cultures, but Bitcoin isn't niche anymore. And so you want to be, I mean, look, you can meet in private or meet in a smaller culture also, but Bitcoin is not niche. Bitcoin is mainstream. In fact, I don't believe this thing when people say we're still early. I don't believe that at all. We're not early.
Hold that point, because I want to ask you on something. I think there's a touch of the whole surfer town meets indie rock community values of, selling out. I like their old stuff better than the new stuff sort of thing about the community.
For sure.
Where, and I'm a relative newcomer. I've been around since late 2020, right? So it's been like 4 or 5 years, right? But really only participating through this account January 2nd, 2021. So I'm probably part of the new wave that's changed the culture a little bit, and perhaps to some people's chagrin too. But I don't really care too much about that. I just think, stick around, bring what you do to the culture and retain that so that it can propagate into the future. And so we have that cultural strength. But you were saying before.
Well, I just don't think we're early. I think that doesn't mean we don't have a long way to go. I think we do. But
do you subscribe to the S-curve theory of adoption for Bitcoin? Or do you think it's just going to be a gradual grind like these, for example, Amazon adoption was, and was sort of reflected in the share price as well?
Yeah, I don't know. I don't really subscribe to a lot of theories, so I don't. I think it's possible. I think the S-curve to go up that final leg, no matter what the shape or timeline is, you're talking about hyper-Bitcoinization, which is the opposite of hyperinflation, or I would say it's the corollary to hyperinflation, right? Like if Bitcoin goes from 100K to 10 million in a short amount of time, like it's not about Bitcoin appreciation as much as it is about dollar depreciation. That can always happen. I mean, that's happened countless times around the world.
I kind of disagree with that, and just want to point you out because I think Bitcoin, the whole world is so underallocated to Bitcoin that we don't need to see a manifestation of hyperinflation. What we do need, I think, in order to see that mass adoption spike happen, is an increase in uncertainty before any sort of economic manifestation of that uncertainty.
I think that's true. I just mean like for that final parabola,
I see.
But I agree. To be clear, for Bitcoin to grow does not require the collapse of the dollar at all. So I guess what I'm saying is I think I'm probably more in the steady rise with some peaks and troughs camp than an actual S curve, which is like up a lot, sideways, and then like a final print. I think to get that final print on the S, like you would need like a devaluation of the dollar. But Bitcoin doesn't need that to grow. And in fact, it has been growing, right? I mean, millions of people own Bitcoin and there are more of us every day, right? There's no longer just dozens of us, right? So I think you have to plan for slow and steady wins the race, and maybe you can hope for something more aggressive in terms of growth of the asset and the community. But I just don't think there's any real. I think Lynn Alden's right here. Like nothing stops this train in the end. Like I think the risks to it stopping are that are some of the risks we talked about before, right? The failure of the community to actually defend the thing that it loves, right?
Do you think parabolic blow-off tops in the price are good for adoption?
I think they have been good in the past. I think when you were going in, say, 2017, and that was for almost everyone that later knew about it, that was like the first time they'd ever heard of Bitcoin. And would they have heard it if it just like went to 5K? Or was it the blow-off in the fall of 2017 in December that put it in a headline everywhere, right? So there's for sure a marketing and reputation, sort of like a press PR benefit to massive increases in price. I don't think we really had a blow off top in 2021. No. And I know James Check will say that even the second peak wasn't even sort of real, it was sort of a scam peak.
Yeah.
And was FTX selling Bitcoin to prop itself up and capping the price? And there's all this interesting theories about that, possibly. Didn't really have a blow off top this time either.
Well, the underlying on-chain data
right.
did not really correlate with the second peak, did it? It kind of went up the first time and then it just gradually declined.
That's why you wonder if it's pure financialization in November 2021. I agreed, right? If you look at literal things just like transaction counts and stuff, like the network was looking like a bull market in March of 2021, and then not so much in November, even though price made a new all-time high. But either way, I wouldn't call either of those really blow-off tops. 2017 is like classic. It looks exactly like a true parabolic rise, peak, and then comes down.
The gradual build-up of confidence to overconfidence to exuberance and to mania, essentially.
And I don't really think we had that in 25 yet. In January, obviously, basically the current all-time high is $109,000 on Inauguration Day, basically, I think, or the day before, something like that. I think there was a lot of anticipation about and euphoria about the president's victory and what it would mean for Bitcoin policy. And it was sort of a buy the rumor, sell the news kind of thing. I think we're still much higher than we were at about 85K as we talk than, pre-election. And I think
what were we sort of before it became apparent that Trump was going to win? Because I think that was maybe a few weeks before.
Yeah, well, we got to the low 70s in March of 24. Then we went 237 days before making a new all-time high, which was November 5th, November 6th. The morning, the early morning after Election Day was when we broke that March 2024 all-time high. So we were in, basically, I think at the low we ranged to like 49K, and at the high we were at like 72K throughout that entire period from March to November. That's what people call chop solidation. I think James Check, again, shout out James. And now we're at 85, and it ran up to 109. And the question was, I think everybody knew following the election, a lot of investors knew that they were meant to be long Bitcoin. If they weren't already, they should put on a position. If they were, maybe they grow the position, right? But nobody was sure exactly how long, how much am I meant to own, right? Like how bullish is it? We don't know, but we knew it was bullish. We knew there was a pile of anticipated positive catalysts on the horizon from this new U.S. government. And frankly, I think the government has delivered on a lot of them already.
Quite swiftly, actually. I was surprised at how swiftly. I guess we were all a bit taken aback by how long the SBR was going to, the strategic Bitcoin reserve is going to take. But really, in the scheme of how quickly policy is implemented,
they've moved
that's
fast.
Really, really quick.
Yes. And
to give the order to come back to me in 90 days with the summary of what we need to do is really quick. And they kind of already know, but it's just, I guess they're being thorough about it, right?
I agree. And it's not just the SBR, which frankly I think was one of the least likely to get done and has gotten done. In fact, the executive order, which is called Establishing a Strategic Bitcoin Reserve and a National Digital Asset Stockpile, or establishment of, it actually puts Bitcoin in buy-only mode. It prohibits the government from selling and orders the Treasury and Commerce Secretaries to develop budget-neutral strategies to get more. But it also prohibits the government from buying altcoins, and then puts the management of that stockpile just in the Treasury's
discretion. Because they could only be accumulated through seizure, right?
Law
enforcement actions.
Correct, but they are prohibited from purchasing, literally, in that EO. So altcoins got into effectively sell-only mode, and Bitcoin was put into buy-only mode, right? You can only hold or buy Bitcoin by order of the president, or you can only hold or sell altcoins, which is a particularly more Bitcoin-oriented policy than I think anybody actually expected, and sooner than I think people expected. So I agree. There was other stuff too, though.
What do you think is, sorry, what do you think, I know you were just about to mention it. What do you think is more significant, the SBR initiative or sub 121 repeal?
Oh, man.
Because I think it's clearly the latter for me.
Yeah, I think it probably is too long-term, but the signaling alone, even if they never buy any Bitcoin, let's say they buy $1 million of Bitcoin, right? The exaltation of Bitcoin, the asset by the government that is done by the SBR, I think is profound and will have long-term impact.
So who do you think will receive that signal most strongly?
Foreign governments and sovereign wealth funds, particularly those that are non-aligned, right? So think about South America, Africa, the Middle East, right? Parts of the world that aren't clearly in the US's camp or not clearly in, say, China or Russia's camp in terms of geopolitics, I think have a strong interest in owning a digital non-sovereign FX that is scarce like Bitcoin. I think you're going to see a dam break if the U.S. starts buying. And I think the tricky question for the U.S. has always been, and this question has been, I mean, on the one hand, the president says he wants to preserve the dollar's dominance. On the other hand, he's buying Bitcoin. A lot of people think that Bitcoin is an alternative to the dollar one day. I don't think it has to be. I think it could be, but it doesn't have to be.
Expand on that.
Well, I think it could replace Bitcoin. You could have effectively a new gold-backed global currency, and instead of gold, it's digital gold. Right? That's possible. I don't know that it's preferable, and I don't know that it's likely, but I do know that it doesn't matter. Bitcoin is, even if it's literally just a scarce investment asset, I think has big prospects ahead of it that are going to be positive. So I don't think you need to believe that the government's going to allow Bitcoin to become the new monetary standard in order to be bullish on Bitcoin at all. And in fact, I think governments around the world will work extremely hard to prevent that from happening in the long run. They don't want to give up the ability to print their own money. That's how governments fund themselves, right?
And they will never give that up. I think my contention is that any functional government will have enough trust to be able to continue to issue their own currency, and that will not change. And if they lose that trust, it will essentially mean that we're living in dysfunctional societies. And I don't want to live in a dysfunctional society. I think that's a very difficult situation for humanity if the United States falls into complete and we're not talking about, just, what's happened where we're not quite what we used to be. I'm literally talking, despot level dysfunction where the currency is worthless. It doesn't, you have no faith in the dollar retaining any kind of practical value. I know we can talk about devaluation, but there are some countries where you wake up from day to day, month to month, and you don't know whether or not the currency you hold is going to have any kind of value.
Right.
That's the sort of dysfunction I'm talking about. The level, and even those countries continue to have a pretty much a strong monopoly on the issuance of currencies within their borders. So imagine the level of dysfunction that you would need for the US dollar to no longer have, or the US government to no longer have any kind of trust such that people stop using it. So I don't think that's going to happen in my lifetime. We could be surprised by that.
Yeah, right? and I think this is one of the things that's really tricky about the SBR is that if they start buying Bitcoin, it could accelerate the destruction of the dollar's credibility, right? And I think especially if it's the U.S. Treasury Department, which is tasked with managing the United States' fiscal and economic policy, right? So this has always been a tension here where it's like if President Trump is saying he wants to maintain the dollar's reserve status, but on the other hand, he's ordering the Treasury Department to buy a non-sovereign digital scarce, FX.
Let's unpack
what is the
little
impact
bit because, America has supposedly owned a bunch of gold for the longest time, and that hasn't undermined the United States.
But they haven't been buying it. I think if they
have
came
they
out
not,
right now,
have they not bought any since?
Not that I'm aware of. No,
okay.
I think if they came out and said we're buying billions of dollars of gold, that would spook the market, right? So I mean, it's actually foreign central banks that are buying a lot of gold because they don't want dollars. Like that's sort of what's happening. Look, I mean, there's nuance here. I have debates with my friends at like the Bitcoin Policy Institute about this all the time. I mean, they were saying that there was a proposal that Matt Pines wrote that was to use the Exchange Stabilization Fund, which is a vehicle inside the Treasury that is ostensibly can be used to help stabilize the dollar. And they were saying, well, there's some billions of dollars in there. They could use that to buy Bitcoin. And I was saying this exact argument I just made to you that like that's for protecting the dollar. So if you start buying Bitcoin to protect the dollar, it's gonna spook people.
Yeah. So what's the counterbalance?
And what they said was, well, maybe even if you're right though, Alex, they could buy a little bit. Like, what's the threshold of what spooks people? It's certainly not nothing. Certainly not you buy $1 and now everyone's spooked, Alex. And I was like, I don't know. That's a good question. Maybe there is an amount, even in that vehicle itself, that you could buy Bitcoin and not spook the market.
So there are two concurrent themes within the cryptocurrency space. One is Bitcoin. The other is stablecoins with respect to the US dollar, right?
Yeah.
So if we do accept, and I'm not sure I do, but if we do accept that purchasing Bitcoin, the US government somewhat undermines its own currency, we then have global adoption of stablecoins, which is further entrenching the strength and utility of Bitcoin, of the United States dollar. So how do you see those two countervailing forces?
I think they are countervailing. I don't think I have come around. I don't think buying a little bit of Bitcoin, especially depending on how you do it, if you do it cautiously, really will undermine the dollar very much. I think there are other bigger forces that are undermining the dollar, such as tariff policy. I don't know that it undermines it, but like I said, it makes it more costly to buy our dollars with your goods when we're supposed to be exporting dollars. Like the whole point is that it's easy to get dollars, not that it's hard. And that exacerbates a multipolarity, which also reduces the dollar's global reserve status, right? So these big, giant global foreign policy forces are detrimental to the dollar's reserve status. But then if you look at stablecoins, and Scott Bessent said this directly at the White House during that crypto roundtable, he said, we are going to preserve the dollar's dominance and we're going to use stablecoins to do that. And it's not just the acceptance of the dollar as a medium of exchange that they want to protect and promote. It's the ownership of U.S. Treasury debt as the foundation of the global monetary system that they also want to promote.
What's the machination there? So a user buys a stable coin. They deposit whatever currency it is that they're depositing, the equivalent to the value of the stable coin. Stablecoin issuer like Tether then does what?
They buy treasuries primarily. I think the vast majority of stablecoins today and of fiat-backed stablecoins. There are some weirder ones in DeFi, but and by the way, not just the ones that exist today, but basically both of the bills in the U.S. Congress that will legalize and formalize stablecoins also require that the vast majority of collateral in the stablecoin is short-dated treasury debt. So like 93 days or shorter. So like highly liquid U.S. treasuries, right? Where you can buy, billions of dollars of these, and there's a huge market. It's liquid. It's basically the foundation of the global system and of the dollar is U.S. dollar-denominated issued debt, sovereign debt from the United States.
That regulation, I guess, it does two things, right? It brings in money, but it also it builds trust.
Yes, it increases the safety of the consumer safety of the stablecoin. It says not only must you be fully collateralized, you have to be fully collateralized with highly liquid assets, high quality liquid assets, HQLA, right? Which is short-term cash, basically.
So that's been one of the critiques of, Tether Truthers, Tether FUD, is that show us your books, because Tether is a private organization. They're not offshore, obligated to do that. And so for the longest time, there's been a bunch of people, making accusations about the solvency and the viability of Tether on an ongoing basis, accusing them of essentially printing money that's not backed by anything. And so you see that whenever a huge amount of Tether is printed, and I guess the correlation between the Bitcoin price surging and Tether issuing more US dollar stable coins has been one of the things that the Tether truthers and the Bitcoin fudsters have been holding on to, saying Tether is literally just pumping your bags with imaginary money. But we saw in the last bear market, when there were a huge number of redemptions, Tether was able to see that through absolutely without any concerns whatsoever, fulfilled through their partnership with Cantor Fitzgerald. And Cantor Fitzgerald is a bank that has a very special relationship with the Fed. It's one of, is it 20 banks?
I don't know how many, but yes, it's a primary dealer.
Primary dealer at the Fed.
That's right. And also a private company. The CEO of that company, Howard Lutnick, is now the Commerce Secretary of the United States, right? So is a senior cabinet level official. The Tether story has evolved a lot. In 2017, it was that they were printing these tethers out of thin air and using them to buy Bitcoin. Even some very infamous, I won't even name them, but infamous academic papers suggested that there was a correlation here. Then it was that they're not backed properly, and they did have an incident where I think a custodian of theirs, Crypto Capital Corp, had its funds stolen, which caused Tether to become sub 1-to-1 backed for a period. But again, I think my recollection of that story was that, those funds were seized by the U.S. government, right? And they ended up paying a fine and agreeing to some stuff with the New York Attorney General around transparency. Then it was, during the FTX period, they're not going to be able, they don't have it all, right? And they redeemed like $12 or $13 billion in like 5 days or 8 days. I remember that. So that was around about the time that another so-called stablecoin, an algorithmic stablecoin, Luna, is that what it was called? Yeah.
Luna? What was this called? UST?
Yep.
Depegged. And so there was a lot of fear in the market. I mean, if you were a Tether fudster and you wanted the ideal situation to put maximum pressure on Tether to see whether or not it could withstand the pressures of the market, that was probably it, because we just had one spectacular, massive failure.
Yeah.
And everyone sort of looked around and thought, who is going to be next? And of course, Tether was the prime target. And there was a lot of FUD being spread through the media and the timeline, and the pressure came hard. There were redemptions in a very short space of time.
Right.
And I remember Paolo tweeting at the time, redemptions X billion, did it, no sweat. We've got no problems whatsoever.
If you don't have leverage and you are a fully reserved bank, basically, right, where we're not rehyping the collateral, right? We just have it, right? Then it should be a run on the bank, like a run on Tether, should be no problem.
And there was back then, and there still is a fundamental difference between an algorithmic stablecoin, essentially backed by a token, versus Tether, which was backed by US Treasuries and a bunch of other commercial papers at the time.
I think their collateral stack, if we believe their attestations, and I have no reason not to personally, but it's mostly U.S. Treasuries. There's some other stuff, cash, Bitcoin, but again, it's so big that they have to be liquid assets, right? Like, let's say something like $7 billion of Bitcoin in there, but it's $150 billion stablecoin. The vast majority, you'd have to come and redeem so much just to get down to a part that isn't treasuries, right? Like, they have plenty, I think. But also in these stablecoin legislations that are being proposed, the Genius Act in the Senate and the Stable Act in the House, they prescribe specifically what the collateral mix must be, right? So not only do they prescribe it, it's highly safe.
So Tether will have to report?
It depends. This is a big question, by the way, about these bills. I think like Tether is headquartered currently in El Salvador, and they are not headquartered in the United States, but Tethers, right, USDTs, can be traded in the United States. Coinbase trades them, right? Like you can get Tether on Coinbase, even though they like are partnered with Circle, right? I think the big question is like what to do with Tether. Like, do you try to force them to move to the United States and register here and go through the pathways established in this bill and these bills? Do you not force them, but not let them? I think the Genius Act in the Senate says they can't market as a stable coin in the U.S. if they don't come in and register, but otherwise secondary trading is fine. There's harsher restrictions in the House version, right? Some level of carrot and stick. And I think in general about how to deal with Tether. And it's an important question because Tether is by far the largest worldwide. And by the way, if you want to promote US dollar dominance, you need something like a Tether. It can't just be a payment stablecoin inside the US for Americans to push around, when they buy at the grocery store. Guys, Americans don't need stablecoins. You can use Apple Pay. Almost everyone, right? There's a high level of payment sophistication in the United States already. Like and by the way, Americans buying and using their own dollars is not what's going to create the dollar's global reserve status. You need to export the dollars.
And Tether is mostly used outside the United States.
Yes, it is,
because that's who needs it.
Yes, it is.
Yeah.
And it's this. There was this great story. I remember somebody asked Bill Gates, like 1999 or something. I forget where I've repeated this for a long time. Some anecdote about Bill Gates was asked, there's 20 million copies of pirated Windows circulating around in China. Doesn't that make you mad? And he was like, no, it doesn't make me mad. I'd rather have it be Windows than Mac OS, right? Like there's a value, even if it's black market. Like if your goal is to be number one, you want it in everyone's hands. Sure, you want the important players to play by the rules, or you want to have insight, but you get more insight even with Tether. Tether's blocked thousands of addresses at the request of governments, right? It's not. So anyway, but I want to make this other point about the stablecoin bills. And you raised this. Yes, on the one hand, the collateral is important for safety. On the other hand, it creates a buyer of U.S. debt, right? By law. The federal government, and even when it's not law, they still operate. I mean, to be honest, like Circle and Tether already are mostly treasuries because that's the smart way to operate.
At a moment when the number of buyers of U.S. treasuries might be falling.
So when Secretary of the Treasury Scott Bessent says we are going to maintain the dollar's dominance and we're going to use stablecoins to do that, I believe he means two things. One, that we're going to create a massive buyer of U.S. treasuries at exactly the time when we need it most. I mean, if you look at, you follow one of the key metrics that people are following for the world's confidence in this administration's economic policy is the 10-year treasury yield, which is at like 4.5%, which is pretty high.
It's spiking. So
they need
since
it lower.
The tariff drama exploded,
yes,
the expectation was that rates would fall, and they have not.
So rates rise when people sell bonds, and they decline when people buy bonds. So like when rising rates indicate a declining rate of interest. I shouldn't say rate of a rate of demand for that debt. And so we need people to buy that debt because we need the rates to come down so that we can refinance our massive debt in general. Like that's a big long-term problem the United States has. And this is at the exact time when in a more multipolar world, presumably there's going to be more central banks buying things like gold than US treasuries, right? So you need that buyer of debt, but also you can grow the use of the stablecoin if there is declining interest in dollars or U.S. denominated debt by sovereign wealth funds or central banks or governments. We can kind of subvert that strategically by putting dollars on all of their citizens' phones. So to me, there's an extremely interesting countervailing force to that multipolarity and to that headwind to dollar reserve status, which is, you might not want it, your government, but in your like other, again, UK is like, doesn't need, you guys have also highly advanced financial system, right? But like random non-aligned or even antagonistic country, you guys don't want to buy our dollars and our treasuries anymore? Like fine, but we're still going to put with a smartphone app, we're going to put dollars in all your citizens' phones. So it's a highly subversive way that you can grow the dollar and counteract the trend of multipolarity and declining interest in treasuries by by exporting dollars through stablecoins. And I do believe that's part of their big plan, which is a very interesting plan to me. And it is dollar maximalism, right? So I think they're going to do that. I think they want to do that. They also like Bitcoin. I mean, Scott Bessent, the Treasury Secretary, also said that Bitcoin is becoming a store of value. Just said that like a week ago. So they know both of these things. And I do think they countervail to your point, not just Bitcoin and stables, but also tariffs and stables. I think stablecoins are a powerful tool. And, while there may be rivals to the dollar emerging in global monetary politics, such as, rumors of a BRICS currency one day, or China's digital yuan growing significantly through its Belt and Road Initiative and all that stuff. In cyberspace, the dollar knows no rival. It is 99.9% of the stablecoins in existence, right? So leaning into that, I think, is a powerful strategy for the U.S. government. I think it's what they intend to do. Bitcoin has a huge role in that place, right? Because there are still dollars and investments. Those dollars, or digital gold, right? Those dollars, accessible though they may be, are inflationary. They're not good stores of value long term. I mean, it's down forever, right? And that's by design. But dollarizing the world, and by the way, it's the same technology to store a stablecoin as it is basically to store Bitcoin. So maybe and you'd probably talk to people in foreign economies that have inflationary stuff. Sure, a lot of them like Bitcoin. They all want dollars, though. So I think there's this interesting strategy here where the U.S. government thinks they can outsmart the Triffin dilemma. They think they can put impediments on the acceptance of the dollar by raising revenue through tariffs, which, like I've explained, right, makes it harder to buy dollars with your goods. But they can countervail that with stablecoin explosion.
It's been quite some time now since the bear market has left us. But do you remember what was the date of the exact bottom?
Like November
something
14th, 2022, sometime right after FTX. So FTX collapsed in the middle of November. I can tell you, we started the year 2023 at about 16,005. So 16.5K Bitcoin. Ran to 30K into March when Silicon Valley Bank collapsed in 2023. Then ranged all the way until like October. With some positives, like when BlackRock filed for their ETF in June, I think, of 2023. Grayscale won their court case against the SEC at the DC Circuit Court of Appeals in August 23.
Huge moment in Bitcoin history.
Yeah, and that told a lot of people that the ETFs were coming. We were like, wow, we're reading this, and we're like, they're going to be forced to approve the ETFs. And then that created that. There was a great time, I thought, August to January 23 and early 24, where we all kind of knew the ETFs were coming, and there was just this drumbeat of like, and there was all this filings. Remember, we're just like James Seyfarth and Eric Balchunas from Bloomberg were like following these guys. There's like, oh, a new filing. Like, can we get any hints? And Bitcoin just ran. And I think
they did a great job keeping us informed of what was happening.
They did.
And for the most part, like remarkably accurate about what their interpretations were for the approvals and the timing and all the rest of that. So they did. I was really grateful for their service to the community as well.
Yeah.
And then there was kind of a pump in anticipation of the approvals, and then after the approvals, there was a bit of a sell down.
There was.
And then when the market realized
February, March
crap,
was like, wait a second.
Flows.
Yeah, February, March, after the flows started to really outweigh the Grayscale outflows. I mean, and then we did, I think, all-time high at 69K or so in March. And then we just ranged for, like we talked about before, 237 days.
Yeah, that was...
but, that's what will happen. I think there's research that, you can do this. I don't think I've specifically, I've done the chart once or twice, but like huge majority of Bitcoin gains come on a few days a year, right? So it's the classic that it's about time in the market, not timing the market. So if you're bullish Bitcoin, you just got to be owning Bitcoin. You can't just, and this is another thing, not just the altcoins, but you really recommend to normal people not to try to trade. Vast majority of people do not make money trading. But long-term holding in high conviction investments is how most people make money in investing. And so, imagine if you were like not in for example, imagine if you didn't own Bitcoin like November 5th and went from 60 something K to 85K in like a day and a half. Yeah. It's that air pocket where nobody actually, until very recently, nobody had ever actually purchased Bitcoin between like 70K and 85K. Because if you look at the price chart, it literally teleported there.
The Trump pump was
the
very
Trump
real.
Pump. It was.
We were kind of expecting that, but like I guess there's two questions a lot of people are asking themselves about price action right now. Is an arbitrary cutoff point is like the end of the year. What's it going to be? That always makes a headline, but people do think in calendar years for whatever reason. And then the other sort of frame of reference is the cycle. Our cycle's over. I posted that the other day, and I think it was 52-48 split, which I was surprised at. Mm-hmm. I thought most people would say yes, it's over. I still think those cycles follow liquidity essentially, and it's just been coincident every 4 years. I think up until about the peak of the 2021, 2020, that sort of point, I had the view that perhaps there were cycles, and then I realized as soon as I saw the liquidity charts, this is all about liquidity. It's a liquidity sponge, and that's all it is. But interested in your views on that to wrap this up.
Yeah, so let me start with the price prediction. So we published a set of predictions December 31st, and I said 150K by sometime in the first half of the year and 185K by the end of the year. That had me on a relatively low end of most people who were making bullish predictions. I mean, not of most people, but of all the bullish predictions I saw come out, that was like I was sort of in the middle to low, which I'll take some solace in. It doesn't feel like 185 is in play right now for the end of the year, so I don't have a new prediction here, but at the moment, but I think somewhere lower than that, but higher than here. I think we. The resilience of Bitcoin at 85K or even 80K with, equities at one point down, the NASDAQ was down almost 25% from
amid global uncertainty, with no understanding of how much conviction the administration had about seeing through the taraffs at one point,
right.
And then suddenly
then it was a lot.
On a dime,
now it's I would say there's just a lot of macro uncertainty, a lot, and nobody really. And it's not just even when there was uncertainty, then there was surprise, right? I mean, the tariffs that were initially announced in the Rose Garden on Liberation Day were significantly higher than anticipated, right? And so even though they've been conditioning the market for months to expect tariffs. Then they were way harsher than I thought. But now some have been removed, and then 90-day pause. And now it's like there's just a lot of uncertainty. And so I think part of the reason that Bitcoin is performing so well amid that uncertainty, and I do think it is performing well. People are like, oh my God, but it's down 30%. I'm like, yeah, well, again, a lot of that was anticipatory bullishness, right? Like there was some froth there emerging post-election leading into inauguration. Like 85K seems like a pretty healthy, fair price right now, and in fact, I think it should be higher. But I think part of the reason it's not lower is that there are a lot of people who view it as a hedge on uncertainty in general.
Increasingly so.
Absolutely. Yeah. Every day there are new people who believe in Bitcoin and truly understand that it. Let's be real, on a fundamental level, it absolutely is a hedge. It's something that if you don't trust your government, you can take and hide under your digital mattress, right? If you have to leave your country, you can walk with it. You could memorize your seed phrase and walk with it, right? You can send it to anyone and they can't stop you. Like those features are fundamentally extremely powerful, and they're inherently hedges against a fully intermediated centralized system. So, whether it's going to trade like in a one-on-one correlation with gold or more like a risk asset, like that has a lot more to do with who the marginal buyer of it is. And a lot of the marginal buyer from November to now was like hedge funds and stuff, and they need to de-risk in general. They don't just right. So anyway, I think now to the other question though, Archie, about the cycle, I think this is all, I mean, they're related, obviously. I think if you're talking about the halving cycles, the actual net halving in new issuance, that obviously doesn't matter now from an absolute standpoint. 900 coins to 450 coins per day produced by the network on average, which is what the last halving gave us. Like that's a tiny portion of its daily trading volume. I don't think it's impactful, but it was more when trading volume was lower and issuance was much higher. Could have been something. I do think there's liquidity in just the business cycle. I think there will always be cycles, even leaving aside its correlation to other parts of the economy, like global liquidity or the business cycle or equities. People get really excited, then they cool off, then they get excited again. Like that's very common, right? I think things like gold are much more stable, but like with time, over time, I think Bitcoin's volatility will go down and it has empirically been going down. It's realized volatility. So I think the cycles will further diminish, but it's not that. And I agree. I think if the halving did matter, it matters by half. It's even less than half because it's not just the issuance. To me, it's the daily issuance versus daily float of the trading volume, right? So yeah, the issuance has been halving every 4 years, but trading volume's been going up in some cases more than double. So it fundamentally shouldn't matter that much.
I think it's now just a social phenomenon. Yeah, it only matters to the extent that we.
Well, efficient. I was going to say, I do think even still, it is a quadrennial marketing event. Every 4 years, now Fidelity and BlackRock and Invesco are going to be writing papers about what the halving means, right? That alone. It is going to be a question. You remember there was a great clip of Joe Kiernan on Squawk Box on CNBC. The halving is coming. Becky, the halving. Prepare for the halving.
That's
right?
Quite extraordinary that we see it on network TV.
So I think I do think growing institutional adoption, growing maturity of the infrastructure that supports Bitcoin ownership, and maturity of the investor class, and wider distribution of the asset among true believers all points to the cyclicality dampening over time.
Yeah. Alex, thank you so much for coming in. It's been a real pleasure talking to you. I could easily talk to you for another 2 hours. I think it's been just over 2 hours. And very insightful, very informative, as I expected. And thank you so much for coming in. Tell people where they can find you on Twitter, email, wherever you care to share.
Thank you, Archie, so much for having me. It was a great conversation. Great space, by the way.
Thank you.
If you're in London, come and visit Archie here.
Definitely do so.
Follow me on Twitter. I'm Intangible Coins.
Intangible Coins.
Yeah, the coins, they are not tangible. They are digital. They are not physical. You can follow my team's research, galaxy.com/research or GLXY research on X.
Excellent.
Thanks
I can't wait
me,
to
Archie.
have you here again and maybe even see you in New York soon.
Yeah.
Cheers.
Come visit us.
Will do.